Life insurance is a promise to protect your family's future, a safety net for the people you love. Many buy a policy, file it away, and assume the job is done. But the world changes. The value of money isn't fixed. A policy bought today pays out in a future that may look very different. Inflation can quietly shrink your policy's power. So when you buy life insurance, think beyond today. That's the real promise you're making. Next, let's talk about inflation, the silent force that can change everything. Inflation is simple. It's when prices rise and your money buys less. It happens slowly, year after year, but over decades, it makes a big difference. Remember what a movie ticket cost when you were a kid? That's inflation at work. Even a small annual increase, 2% or 3%, compounds over time. What seems minor each year adds up to a huge change in what your money can buy. Inflation isn't just an economic term. It affects your savings, retirement, and life insurance. A fixed death benefit becomes vulnerable. The payout amount stays the same, but its real-world value shrinks. That's why understanding inflation is key to smart financial planning. If you ignore it, your family could end up with less support than you intended. Inflation is always there, quietly working in the background. It's a silent partner in every financial decision. So when planning for your family's future, don't overlook it. The money you leave behind needs to keep up with the world's rising costs. Next, let's see how inflation can shrink the power of your life insurance. Most life insurance policies pay a fixed amount, like $500,000 no matter when you die. But over time, inflation quietly erodes that value. What seems like enough today may not be tomorrow. At just 3% inflation, $500,000 becomes about $276,000 in today's dollars. The safety net you planned could end up full of holes. The number on the check stays the same, but what it can buy shrinks. Let's look at how you can protect your legacy from inflation. You're not helpless against inflation. There are ways to protect your policy's value. One solution is an inflation rider or cost of living adjustment, COLA rider. This feature increases your death benefit each year, keeping pace with inflation. Some riders boost the benefit by a set percentage. Others follow the consumer price index. Your $500,000 policy could grow to $600,000 or more, preserving its power. Yes, these riders cost extra, but think of it as investing in your family's future security. For young families or long-term policies, the added peace of mind is often worth it. Another smart move, review your coverage regularly. As your life changes, new home, new child, higher income, make sure your policy still fits. You might add a supplemental policy to keep up with rising costs. This laddering approach helps your coverage grow with your needs. Don't just buy and forget. Adjust as life and the economy change. Protecting your legacy means planning for tomorrow, not just today. Next, a final thought on future-proofing your family's security. The most important step is awareness. Life insurance is an act of love, but it must work in tomorrow's world, not just today's. Inflation can quietly undermine your best intentions. When shopping for a policy, ask about inflation protection and COLA riders. Compare options, do the math, and think long term. Your goal is to leave security, not a financial problem. By planning for inflation, you future-proof your promise. The safety net you build today should be just as strong decades from now. That's the true purpose of life insurance, lasting support and stability. Remember, $1 today isn't $1 tomorrow. Make your plan reflect that reality. Choose wisely, protect your legacy, and give your family the future they deserve. Happy planning.